So clearly, this deal is strategic. It's also a long term. And as Will and yourself just suggested moments ago, this is really seriously a game changer because, I mean, market cap, you're worth about $1 billion Aussie. You're paying 2.5 times that for this new asset. My question to you is, I mean, this is sort of par for the course for almost all copper producers worldwide, is it not? That everybody is trying to make hay while the sun shines and either up production or add capacity organically or through acquisition to take advantage of higher prices. What about projections, supply-demand projections going out? Because Will and I have both looked at some numbers, and it's in pretty short order, in the next 3-4 years, we could be looking at a oversupply situation, which may not necessarily be advantageous to the copper price, no?
Well, Marty, certainly we look at that. I think I've been in the mining industry for the last 35 years. So when we look at a strategy and an execution of a strategy, we are looking in multiple decades at any point in time. The vagaries of the market, you mentioned it, you might have a copper price that, depending on demand and supply, you'll see some pressure points at various times. What I do know in terms of our analysis is that we are seeing from a supply side, if we focus on that for a second, because it's basic economics at the end of the day, and there are a couple of key drivers. From a supply side around the world, the issues are declining grades at copper mines globally, full stop. 10 years ago, the average copper grade was probably in the order of 1% copper, and today the average copper grade from a mine around the world is probably 0.5%. So it's dropped by 50%. So that's number one. Number two, operating costs globally. It doesn't matter what it is, whether it's people, energy costs, construction costs have gone up. There's no question about that. So it puts pressure. And ultimately, no one in the industry is going to produce the product if they can't make money. So it puts pressure on price to go up. That's on the supply side. And there's been a lack of new discoveries. We're not aware of any new discoveries around the globe in decades. So there's pressure there. And it is a commodity that is critical for decarbonisation of the world. It is critical for electrification. It is critical for urbanisation. So it's got a good base load of demand. And if we actually look at then the demand side going forward, we have that longer general growth in that. Now, in the meantime, a year or two, you may have slight ups and slight downs. But that's a little bit irrelevant to us. And what we're trying to do is accumulate quality assets that will withstand any cycle and be prepared for the next 10 to 20 to 50 to 100 years. That's the fundamental model that we're looking at. So we're not overly concerned on short-term assets. And for example, this asset in MATSA, and the reason why it's of the value it is the margin on this project. It is in the lowest quartile of producers and has probably a profile of 10 to 20 to 30 years potentially.